All right, so you did all the right things to put yourself in a position to actually buy your house. With all the craziness going on in the world, affordability and incomes, like, I'm proud of you, okay? This video is to teach you how to not mess it up, okay? Not to scare you, give you information so that when you get yourself under contract for a house, you are empowered, you feel good, and you know, hey, I got this. All right, let's get into it. I surveyed over 100 mortgage lenders in order to find the top ways that people were messing up their home loans and getting denied. And we found 4 major themes. That's what we're going to cover today. And I'm also going to link to some of those lenders who were gracious enough to give me their time in the description. And you know, I got a little treat for you at the end. Stick around. You're going to want to hear this. So the first one, it's fairly obvious, but people still do it. Okay, you can guarantee that your home loan is gonna get denied if you don't tell the truth. Okay, be upfront and honest about everything, because the mortgage professional is gonna find out. They use this really sophisticated software called LexisNexis, where they go in and they get every incremental detail about your life. Okay, background checks, child support, home ownership that you might not have came clean about, like any judgment from any sort of county or state or whatever, like anything that you're owing in the background, like it's going to pop up. So just be truthful and be honest up front. Most times, if you have a hiccup or an issue or something that needs to be ironed out, you can explain it with a letter of explanation. But if they find out that you are lying, it lessens your chances of getting approved for that loan. When it comes to like getting a home loan, it's all about mitigating risk. And they want to make sure that you are being 100% honest with the amount of risk that you are for them giving you the money. So they're going to use that software. They're going to find out everything. So just tell the truth up front. Also, mortgage fraud carries a hefty fine and sentence. So just keep it real up front. All right. Make sure you tell the truth. Another common theme that we saw that was getting loans denied was opening up new lines of credit or getting new debt. And you also want to keep your credit score where it is. Let me tell you a little story about me and how I messed up, okay? So when I was buying my house, I didn't like my interest rate. I wanted it to get better. So I was like, I'm going to improve my score. They told me, here's how you improve your credit score. Just do this and we'll rerun it. Well, your boy forgot to make a payment on a credit card and it showed up past due. They reran my credit score and my score dropped, which increased my interest rate and my private mortgage insurance. And it was like an overall increase of $300 a month. So I had to go and tell my wife that I increased our monthly payment by $300 a month because I missed a payment. Okay, so if you want to make sure that you don't end up with new terms and everything that the lender tells you up front is locked in, then no new debts, no new credit. See, when they approve you for a mortgage loan, it's essentially like a snapshot of your current situation, your credit score and your debt to income ratio, which means what you got going in versus what you got coming out. And if any of that changes, well, then your risk factor changes, and more than likely the terms of your loan will change. And in today's world, it is super easy to open up some new line of credit. And like you can do it with the push of 1 or 2 buttons. And even if it is 0 APR and deferred payments, all of it still counts. And just to clear something up, oftentimes they'll say that the mortgage professional is going to run your credit again before closing. It's not exactly what happens in most cases. A lot of times they will run a updated debt notification, which is basically another quick snapshot of your current debts. So if you've opened up any new lines of credit or accumulated any new debt, like that's gonna appear and most likely change the terms of your loan. Now, another story is a client of mine bought a refrigerator on a credit card from Home Depot like a week before closing. Well, mortgage lender found out and he actually got denied because he was already on the verge with his debt to income ratio. He got denied and he lost about $2,500 in cash that he had spent to get himself in the position to buy the home. So earnest money, inspection fee, appraisal fee, all of that stuff gone in the wind. And he ended up with a refrigerator that he couldn't use and no house. So no new credit. And another common theme that I'm going to warn you about is changes in employment. All right. So if you hate your job and you want to quit, just wait until after your loan closes. Okay. Because they are going to do an updated verification of employment before giving you clear to close, just to make sure that nothing's changed. And if your employer says, oh, they don't work here anymore, well, then more than likely your loan's going to get denied. And I don't want that for you. Another thing to kind of touch on this too is with overtime. This is another thing we see. You're going to want to make sure that if you say you're getting overtime at the beginning, then you're getting overtime at the end. And a lot of times they will ask your employer that as well, which brings me to my other point here. Another way to make sure that your loan doesn't get denied is to make sure that you can verify your income. You don't actually have to be employed. You could be getting Social Security or retirement, but there has to be a paper trail. No mattress money, no drug money, no money laundering. And I mean, that's really what they're trying to avoid is money laundering. They want to make sure that they can verify every dollar. They're going to look at everything that came in on your bank statement and they're going to want to know where it came from. So that means if you have a friend or family member that's going to be loaning you money in order to make your down payment or your closing costs, then they're also going to want to see their bank statements to prove that it came from them. And they're going to want a gift letter that says they do not have to pay this money back, because if it was a loan, then you would have to pay it back, and that changes your debt to income ratio, which could get your loan denied. I know it's deep, but at the end of the day, it's worth it. I mean, if somebody's loaning me several $100,000, I'm going to want to make sure that they feel confident in their decision. All right, and here's a little bonus. In order to make sure that the lender is going to approve your loan and they have everything that they need, instead of getting pre-qualified at the beginning of the process, you can get pre-approved. Pre-qualified means there's still information that you need to turn in, but based on what you told us, you're good. Pre-approved means you have passed the final boss, the underwriter. It means the underwriter has seen your file. He or she has made sure that everything looks good and is verified. Now, all you need to do is go out and find your house. It's a good way to mitigate stress and to get all the information that they might need from you up front, so that when you're actually shopping, you're good and you got this. I hope this helped. I've linked to some amazing lenders in the description, and I always say real estate advice is a tailor-fit process. So if you want to talk about your individual situation, there is also a link in the description for a one-on-one consult with myself or a team member. Till then, check out this next video. I really think you're going to like it, and I will see you there. All right. Peace.